All right, welcome back for another episode of Carnivore Trades. Today is Monday, December 19th, 2022. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Speaking of, two more winners in the books today, closing out a really awesome year, really strong. Thank you to everybody who supported the channel and supported me on the website and is a member. Anyways, let's get into the markets here. By the way, also the zero DTE video. Thanks for the response in that, and the engagement was really nice there. And I think personally, this is going to be one of those things where it's like Volmageddon. This is gonna crash something. It's gonna break something, and they're gonna blame. Last time they whined and complained about the volatility products, they got those nerfed down, and I think it's gonna end with regulation. They're gonna do some type of regulation here, but these zero DTEs are out of control. Speaking of which, take a look at the most active chains today. Just go look it up. They're all zero DTEs today, and market's under a lot of pressure here, a lot of put buying. Anyways. Market's down 1.1% today on the spiders. Triple Q's down just under 2%. So market's again under pressure here. I said this morning in my short video, 3830 was going to be a good level here for the spiders. Also mentioned that to members earlier, or not the spiders rather, but the ES and the 380 level on the SPY. We had to get tagged, and you can see we went right down to 3830, just pierced through it, and now we're just hovering right above that. There's a chance that we could get down to 3825 here on the ES, but I think that's probably max downside for the day. I don't see us getting much below that here. We do have a half hour left of trading, so we'll see what happens here. But markets just really can't get a bid. It's almost kind of like it's very reminiscent of Friday, where it was just they went no bid really all day long, except for that little short covering we got in the final hour, and a lot of that I think was due to quad witching OPEX. But who knows? Maybe we get a little bit of short covering here today as well. As far as the markets right now, again, I mentioned 380 on the spiders. We did hit that. We got down to 378 and change, 378.28, almost down to 377 handle. And, we're basically at the top side of that gap. The true gap fill is down here at 374. But, we got to the top side of that gap, and now we're kind of stalling out. So maybe the markets can get a bid here. I want to point out, though, there's a pretty good discrepancy right now. So we talked about the spiders paying a dividend on Friday. So that's going to throw things off a little bit. And if we look at the ES, it's 38.32 currently, and we look at the SPX, it's at 38.04. So the March contract ES is in contango to current SPX. So something to maybe pay attention to here, but it's really tough to get a good reading right now because you have the spiders all out of whack because of the dividend. Then you have the ES March contract, which is literally 30 points off of the SPX. So it's a little bit of a tough read here as far as picking out the levels, but there's a couple of them. And you can see right now, I talked about the 380 level on the SPY. Again, the top side of that gap candle, right at 3,800 on the SPX. It's also into a 50% fib, as you can see. So there is some support here. And like I said, 3830 on the ES would be probably max downside. Okay, maybe 3825, give or take, at least for today. But with how skewed everything is, again, because of the dividend, because of this 30-point spread here, there's nothing to say we can't push down tomorrow. And it does look like we're going to close at or near the lows of the day here today, barring a little short squeeze in the last half hour. And the fact that we're not showing any signs of bidding here leads me to believe we could gap down tomorrow. If we do that, I think for the first time in a long time, I'm going to say that the risk is to the upside. And the reason for that is, a couple of reasons, but mainly you're at 410.49 last Tuesday morning, and we're at 379.08 right now. So it's 40 points on the SPY. That's a lot in 5 days. So we've had a nice fall here, but if we were to gap down tomorrow, if we were to get into 375 tomorrow, that would be, in my opinion, a slam dunk to play on the long side. And if you have shorts, I'd be looking at covering a lot of them. We talked about this last week. I kind of dunked on people a little bit when I said, I was mocking kind of the Santa rally talk. I think if we got down there tomorrow, then you'd actually get the Santa rally. That I would favor that much, much more so going into the end of the year. but we'll see what we get. And it's hard to say because, like I said, on the SPX, we are basically, I mean, this is good support. This is really good here, but it's tough to get in front of this train when we have so much momentum here. When you have a failed breakout and then a failed bull pattern, there's usually a lot of downside. There's a lot of momentum that happens, and likewise a failed bear pattern, a failed breakdown, kind of like on the CPI, you get that momentum, you get a lot of power that comes from those moves here. The market tried to break out, and then not only did it fail to break out, but it broke down 2 days later. So there's lots of momentum here, and a lot of bulls that were buying, thinking, okay, this is a bigger bull flag. Let's just remove this. We'll look at the weekly. They're looking at, okay, this is a bigger bull flag here on the weekly, and when that fails, they all get stopped out at the same time. That's how you get that big sell-off here. But again, I do think the more we sell off here, especially, tomorrow, if we get a gap down tomorrow, I would probably be looking at some longs, honestly. I think the market here, just based off of how oversold it would be. And by the way, again, this is kind of anecdotal. We don't always go off of this, but it's good to note. There's a lot of people talking about, 2018 is going to repeat. Powell crashed the market in 2018. We're going to have a Black Christmas. I'm seeing a lot of that talk ramp up on the internet. And, again, it's not a concrete indicator. It's, we follow the charts more than anything, but something to consider here. And I heard some people talking about it last week, but it's really ramped up in the last day or so, especially now that we're selling off pretty hard. So when I see that type of stuff, I generally kind of want to be on the other side of the boat there. And again, like I said, look at the option flow. All of it's 0 DTE. So they're pushing this down, and when you have those 0 DTEs, like I said yesterday, there's no follow through, right? Because every day is like its own macro cycle, essentially. As soon as those options expire, it's like, okay, well, it doesn't matter anymore. So you could get that, that rally tomorrow. But either way, we are into the 50% fib. If we do get down here into that true gap fill, like tomorrow or Wednesday, I would think the long side is very attractive here, at least for a bounce. I'm not saying we're going to start a new bull market, but I think you could definitely, that would be a tradable low here. Kind of similar to what we had in September here, where we came down, got oversold, we got into this critical 390 level, and we had a nice bounce off that. I think we could see something similar to that here in the next couple of days to weeks. Anyways, let's get over here. We mentioned the spiders, triple Qs. Again, impulsive breakdown continuing, Qs down just under 2% on the day. It is light volume, so it is a bit of controlled sell-off. I want to talk about some tech stocks, though. A lot of this, I think, in addition to the 0 DTE stuff, is tax loss selling. Look at ARK. Fresh 52-week lows down 3.32%. So that is a new 52-week low for ARK. Amazon as well. Fresh 52-week lows down 3.5. Google's pretty close. It's down 1.9%. Not quite at 52-week lows, but it's getting down there. Apple down to 130 now, or close to that 130 handle there, I should say. Almost into double bottom. So some of these big tech names getting hit, the ArcSox, Zoom, Unity. Look at Roku today. Roku getting hit pretty hard, down 4%. So some of this, I think, is also tax loss selling, by the way. To harp on the financials one more time, look at KRE. This is a 0.5% away from 52-week lows as well. So Finn's taking another hit in addition to some of these tech stocks. But triple Qs, again, nice breakdown of that channel. Your next stop is going to be right into this red bar here. You have some support, and there's a gap fill there. And then again, the almighty 260 level that I was talking about really back in October, that will be your next major stop on the Qs, although I think we do get some type of a bounce before then. Russell 2000 IWM here. Again, we lost that red bar on a closing basis in the Russell engulfing last Friday's candle. The Russell actually held up better than everything last Friday, but an engulfing reversal today. There is still a lot of support here. This is your last pivot. So you had a reversal. We came back. Now we're basically going right into that pivot here. So 170, I would say, is probably good at area there for the IWM for a bounce. But again, the Russell down, just like everything else there. And then the Dow also getting hit today. Had a nice bounce off that trend line Friday, but unable to hold it here. We'll see what it does tomorrow. There's still a fair amount of support here at 325. Again, there's your gap fill, 200 moving average, and then, of course, that trend line as well. So Dow, it's hanging in there, down 65 basis points. It's down less than everything else. Semis. I talked about this in the short video this morning. This is important. So for the first time in probably months, take a look at the semis today. That is soft. That's some soft price action. NVIDIA, been a market leader for really probably the last month or so, down 2.25% today. and the SMH is showing leadership to the downside. So down 3% with the Qs down 1.8. And you can see even just by the price action here, it's soft, especially compared to the spiders just intraday. This is a change in character. So semiconductors showing leadership to the downside. That's not a good sign. Big picture, again, that doesn't change the fact that we could bounce here and there. I don't want anybody to get confused. And you have some good support here with this green bar, 50 moving average if we get into that tomorrow, and then the 200 level. So there's coming into some support here. But we're seeing leadership to the downside from the semis for the first time in a while. Keep that on your radar because it'll serve you well. IGV, so new lows here, new monthly lows rather, on the IGV. And again, losing that level. You'll have a little bit of support at 250, and then, of course, the gap fill down there. But cloud also weak. Probably some tax loss selling in the cloud stocks space as well. Let's take a look at CRM. Yes, CRM close to 52-week lows again. Oracle's been a strong name. That's actually holding up. Let's look at Adobe. Yeah, Adobe taking a little bit of a hit there. So maybe some tax loss selling going across the board there as well. Dow Transports. Ouch. So possible failed. We had this nice channel here. We'll see what it does tomorrow, but it lost that 50 moving average, which is not a good sign. And we did fill that gap. Maybe it can get a bounce here. The big level on the transports here is this green bar low at 13,475. So right there, a close below that on a weekly basis would not be good for the transports, and it would not be good for stocks. So watch that level there on DJT. Interest rates, 10-year here, actually getting a nice little pop here. And I still got that buy signal on the 30-year, and we got a nice pop here, up 2.5% on the day. You basically stalled out at that 20 moving average, but you are going to close it. Actually, we did close above that red bar. So this little bearish inside bar here is now negated on the 30-year. And you can see ZB there, pulling back to that 20 moving average, basically reflective of the TYX here. So I still have that buy signal on the yield as far on the long bond. It's not a huge, we're going to have a huge ripper, but it's a buy signal. So it's a tradable buy. Anyways, 2-year also down with everything else. This is still holding up though. It has an inside bar here on the daily. So I don't really see any issues currently. XHB. So nice little dump here in XHB. You're still well above this green bar low, so it's still safe. You stalled out at that 100 moving average there intraday. And again, it's, home builders are still miraculously holding up pretty well. I do think this sector will be a short sometime soon though. ITB there, you see still holding that 20 moving average, but it's hanging in there. And then VNQ breakdown. So, this is going to close below 83.95, which is a failed head and shoulders. So we can erase this and we can erase this. This is a failed pattern, so VNQ is now vulnerable. This is a sell the rip stock now, or ETF rather. So be careful with the real estate sector here. Home builders not really showing the weakness yet, but the general real estate equities are, and we are losing that 50 moving average as well. Next stop is gap fill, and really after that, you have this green bar here, this power bar, and it's at really you're basically looking at 52-week lows. Anyways, XLF. Again, taking a hit with everything else down 54 basis points today, losing that 100 moving average. Let's look at BRK again. We still have that head and shoulders. Yeah, head and shoulders top there on BRK. It is into the 50 moving average. You have a pivot and a green bar there. So maybe you can get a bounce here. But I think financials are short. KRE, KB, KBE, XLF. Any of these names are short on bear patterns or retraces. So that's where I'm at right now. And full disclosure, I am short XLF via SKF. We did take some profits on that last week, and we're nicely in the money on the second half of our position. But just want to point that out. I do like these on a retrace for another short. Bank of America is a weak name. Wells Fargo. These are all leading to the downside. So on the next leg up, you want to pick on the weak ones. So, call it carnivore trades for a reason. What does the lion do? There's 1,000 zebras, right? You pick on the one with the broken leg. They sit there on the ridge and watch, the zebras and all the antelopes and all that stuff go by. They wait for the right time. They wait for the right one. This is the right one. This is your broken leg. This is the zebra with the broken leg. So, anyways, broker dealers here, XPD lower, taking out Friday's low as well. Didn't even get a bounce at 445, so might want that 200 moving average there. But it is a little oversold, so just be aware of that. On to energy. Crude here up 2% on the day. Let's not make anything out of it. We're just kind of backing off of that 200 or 20 moving average. I wouldn't do anything with crude at the moment. I would really like another leg down, and then I think you can get into it. But we're not quite there yet, so let's just not even worry about it. XLE down with everything else, but holding up. I mean, it's down only 10 basis points, so it's hanging in there. XOP down 2% here, but again, still above last week's lows, whereas, you know, the spiders are already above or below last week's lows and continuing to the downside. OIH hanging in there as well. Up, hey, it's scratching out a gain so far. Got about 15, 20 minutes left, so it's holding up okay. Again, target hasn't changed. You're still looking at 250 to 260 on this. Nat gas backing off a little bit as well. We'll see what it does. If it can make a higher low, then it could be a buy on a bull pattern. If not, then you still want this sweet spot here at around $5. So again, this trend line, we got to go to a weekly there, but you can see it goes all the way back to 2020. And that's been a good buy level here for quite some time there on nat gas. Anyways, dollar index hanging in there. Again, the inverse relationship between the dollar and the spiders is kind of broken down a little bit. I still like the dollar for another leg lower, but not much. So we'll see what we get here. Gold hanging in there, just basically down 20 basis points with the flat dollar as well. Silver, also just kind of a retrace day, nothing going on there. And then platinum kind of getting into this buy level. You know, I wouldn't have a problem if you took a shot around 970 tomorrow. There's some pivots here, upsloping trend line. A lot of the time when you get a wedge like this, the first break is usually the wrong one. So sometimes you get a fake break there, and you also have, again, that 50 moving average and this bigger trend line to fall back on. If it did get, you know, and if it did fall lower somehow and that level failed, I mean, right into this area is pretty good too. You got a green bar. This is where you broke out, 200 moving average, 100 moving average. So you could, you know, theoretically pick up a position here and then add to it in that area. That could work out for you. Eventually, this is going back up to the highs. So I guess it doesn't really matter. That's up to you to figure out if you want to do that. But I personally am probably not going to get into it here. But I wouldn't have a problem if anybody wanted to. Copper. A little bit on the weaker side, but nothing terrible. You might have a bit of a rounded top starting to build here in copper, so be careful of that. And again, you still have a big down move with a weekly kind of inside pattern there. All right, and then over to Bitcoin lastly. If I can get it up here. I think I'm going to have to use Thinkorswim. Sorry about that. I didn't have my window ready. But in any case, Bitcoin down just under 2% here today. With everything else, it's not doing anything terrible right now. But again, you know, it's down. It's coming off the lows. It's actually kind of leading a little bit off the lows. So maybe it gets a little bit of a bid into the after hours into tomorrow. But again, big picture, weekly pattern. And you had a 50 weekly bear pattern and a 50 MA rejection there on the daily. So I am not in love with Bitcoin here. I still think it needs to get down to that 11,000 area, maybe, 11.5, 12,000, somewhere in that area. But that is a ugly weekly inside bar there on Bitcoin futures. Anyways, back over to the spiders. Yeah, we're getting a little bit of a micro bid off the lows. I don't know if this holds tomorrow because this is a really weak close. We got about 15 minutes left. So, I mean, I don't think they're going to do much here in the last 15 minutes. I mean, how much can they do? So we're basically closing at the lows of the day. If we gap down tomorrow, there's the table set for a V-shaped short squeeze. I just, it's not going to be like this. It's not going to be like this, but it'll be a tradable move if you ask me. Anyways, guys, I'm going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. Talk to you all tomorrow.